All right, so good evening and welcome to yet another mentorship live session. We are on the 15th of August 2019, Thursday night. It happens to be our 73rd Independence Day. Um, so good wishes to everyone who have joined today's class. So where do we stand and how did the market fare over the last few days? We had a couple of holidays. It's a truncated week, Monday and today being holiday. But volatility has been very important aspect. So I'm using for the Nifty analysis, I'm using the trading view interface because I have the channels drawn here, if you know. So on my left, I have the daily chart. On my right, I have the 75-minute chart. I'll do a top-down approach. I'll first zoom out the daily chart. And if you remember the tale of two channels, the same theory that I had published a couple of weeks back, and 10,800 has been holding really well. If you remember in our last class, we drew this expected resistance zone from which we have seen the market come off quite sharply. And if you recall last Thursday's class, we mentioned that if this fails, or let's say if this zone actually gives us resistance, then we should be prepared for a possible retest of 10,800. How did we get this? Now, let me take you to one time frame lower. This is the 75-minute chart of Nifty Spot. We have this long-term price channel, which I draw generally using, not generally, I draw always using the RSI. This is the excess amount, which overshot and then led to a very sharp decline. Anyways, this is the same gray zone which was drawn on the daily chart, and we were anticipating 11,200 max. Nifty Spot goes all the way up till 11,181, so around 19 points short of 11,200, but this is the zone, the 78.6 Fibonacci retracement, the blue arrow. This is all done in our last week. Market comes down sharply, bounces back, and it's hovering. I have redrawn the immediate channel. The immediate channel is this green one. It's not a very good channel. I've drawn it from the relative strength index, of course, but I say that it's not a very good channel because I need a retest of either the channel border on the top or the channel border at the bottom. And once I get that, and if the market or the prices stays within this channel, then I can confidently say that this is a stronger channel. But till now, this is the immediate channel. This stays as the immediate zone of 11,200 close to as the resistance zone. Until and unless this is taken out, the market will continue to face selling pressure every time it tries to go up. Now, what if it tries to come down? Looking at this, let's say 1, 2, 3, 4, 5 kind of a move. I'm not doing any Elliott count. I'm just showing waves, just looking at the levels. There is no scope of drawing any channel based on RSI from this price behavior as of now. So the market stays in a downtrend, but the market is definitely volatile. In terms of supports, I think the psychological 10,900 and the psychological 10,800 is the critical role, but I'm not going to pay too much respect to 10,900. It's 10,800, which is very critical for me. So what if the market crashes? What if? Let's talk about the worst case scenario first. So this is back to the daily chart, all right? And this was the last low of 10,784, 810. So this low, if I talk about in terms of low, not closing price, it's 10,782. Now, if 10,782 is breached and the market bounces back the very next day up if this low is broken for, let's say, 10, 20, 50 points, and on the same day the market goes inside 10,800, or the very next day it goes above inside 10,800, then this will be a bear trap. This will be 100% bear trap. On the other hand, if this low is broken and the market is in no mood to bounce back, then we are headed for some serious correction. In that case, we know we have 10,400 and the psychological 10,000 level. That's on the downside. On the positive side, let's come back to the 75-minute chart, and this will give us clearer picture. On the positive side, we need the market to take out 11,200 bare minimum, and then only there's a possibility that the market can inch further up. In that case, we will have to redraw our levels. I have to pinpoint these highs and lows based on the behavior of price, and then we can have some upside projections. As of now, 11,200, and it needs to go inside this erstwhile blue channel. Looking at the fall, if I look at the daily chart, the kind of fall that we saw one day back, this was this sharp red fall, the 13th of August, then an inside bar on the 14th of August. This red bar's high-low will be important considering the sheer size of that candle or the bar. But volatility is very much an in thing. We need to be a little careful. You will get a lot of swing short candidates, go for them. If you get high conviction hook long trades, then only take the trade. These channels will be far more clearer to you if you look at the weekly chart. There you go. So we are looking at a weekly chart as of now. It's an inside bar on the weekly. But overall, we maintain the same levels, 11,200 on the upside, 10,800 on the downside. Markets are close to support channel, and we hope that these supports hold. The first sign of confidence will come once 11,200 is breached on the upside. That's about our view on the Nifty. I will continue to use tradingview.com because the channels and the way it represents is very clean for us to understand. Now, as always, I'll request you to post your doubts and questions. I will take up one by one each and every one of them and make sure every doubt of yours is answered. So please start asking your questions.